All right, folks. I want to start a new series on what I hope is a limited series, where I will take a more in-depth look at all of the losses that we have. It's all well and good to look at your wins and say, hey, look at these, and try to learn from them. To be honest, you learn the most from your losses. So, let's take a look at our what is this? This is Euro Yen. Excuse me for forgetting there. Um, and analyze what if anything went wrong, or if it's just that's the market. All right. So first things first, let's take a look at it as if it was back on 2 days ago. So this would be Friday. Now the first thing people might say was, well, do you enter trades on Friday? I enter trades every day that my indicator tells me to enter into them during the period where I do my trading, which is the last hour of the trading day. For me, that's an hour before the New York close, which is 3 o'clock Central Time. All right, let's take a look though at our. This is a new algorithm, so our standard entry on that day would have been this. So what would we have seen? Let's turn our lines off. All right, so let me put the trade arrows on here. All right, so we would have we would have had our baseline cross here, as you can see, our baseline cross, but we were still showing long. Let me make this a little bit larger. We're still showing long down here. And the whole way, all of this and all of this was we were showing along. And I know you might be thinking, well, this I don't want to miss out on this. I don't want to miss out on this. Well, okay, I hear you, and there are ways to build your algorithm where you won't miss out on that. Mine is built for long runs and keep me out of the short stuff, which is what I would consider that. So we finally got a signal to go short right here this day. As a matter of fact, you look out over here in our data window. The day before, the C1 long was still higher than C1 short, so we still had a long signal. And then this day we had our short signal. So first thing first, do we have with this a standard entry? Do we have a short signal? Yes. Does the baseline agree? Are we on the correct side of the baseline? We're below the baseline, so we can only go short. Number three, do we have agreement from our secondary confirmation indicator, our C2? If you look down here, yes, C2 is short. And then lastly, do we have enough volume? The answer is yes. Now, for the old algorithm, we had one extra step, which was, are we within one ATR of the baseline? Well, because of the baseline that I'm using, which is the Gann high-low, I can't do that anymore because unlike a moving average where the baseline would be somewhere inside of price, the Gann high-low is designed to be above or below price. So that's not a factor. So it's only those four steps, right? Do we have a baseline cross? Does C1 agree? Does C2 agree? Does volume agree? All of those things said to go short, that we were in a downtrend, that we were in fact in a short trend. So I went short here, and then the very next day it went against me. That happens, all right. So as far as the mechanics of the trade setup, we followed all the rules. Did we do anything wrong from a psychological standpoint? We could have said, let's take a look over here. What we're not supposed to do, we're not supposed to use anything other than indicators to make our decision. Let's look at what something else might have been. So Euro Yen, turn that off. Euro Yen is right here. Let me embiggen it. All right, so let's go back to old supply and demand. All right, this is a daily chart. Did we base our decision on supply and demand? No, right? We had a pivot over here, but there was no demand zone. So there was nothing that we could have looked at to say, hey, let's not get into this. From a price perspective, maybe. Um, but so we didn't break any rules as far as following anything other than our algorithm. Risk management, we followed our risk management rules. Our position size calculator is set. Right now, I am forward testing, so everything is set at a very, very low percentage, between 0.15 and zero point 0.2, just enough to make me have two legitimate positions, which is going to be 0.01 lots, right? So that's fine. So from a psychological standpoint, from a risk management standpoint, from a trade execution standpoint, we did everything right. So how come we lost? Because that's trading. Sometimes things just don't go your way. I mean, again, the ATR was 145 pips, and the candle that day is 210 pips. So 145 divided by 210 is 60. Okay, other way around. 210 divided by 145 is 1.4. So basically 1.44, 1.45. So it's an ATR and a half that it moved that day. Why? Who knows? Who knows? There could be a legitimate reason. There could be no reason. What it boils down to, is just follow your trade plan. When I back tested, remember when I back tested this algorithm, I had a 70% win rate and a 45% return. Again, I'm not expecting that going forward, but even then, right? 70% win rate, what does that mean? That means I'm losing 30% of the time. 3 out of 10 trades I'm losing. So you're going to have losses. Things like this are going to happen. Now, is it going to be annoying as I'll get out if price comes back down and keeps on going? Yes, it absolutely will. But hopefully, we'll have a signal from our continuation indicator to re-enter the trend as it continues to the downside. Long story short, we did everything right. It went against us. That happens. You can't let that get into your head. Just follow your trade plan, follow your algorithm, and trust the work you've put into it. Hope you like this series. I'm going to continue these. Every time we have a loss, we're going to do a dive into it to see just what exactly went wrong, if anything. In this case, I give the trade an A, right? Nothing happened. We didn't do anything wrong. It just, the market happens. All right, I'll see y'all later.